Much for such a kind presentation. I absolutely appreciate being here. I absolutely appreciate the invitation. It is truly an honor. And especially when you get contacted to talk about something that you're passionate about. And in this case, we're gonna be talking specifically about the numeracy skills and numeracy aspects of its impact on financial literacy, and with that, the impact that it has on households, on wealth accumulation, and quantity and quality of indebtedness. So one thing that I'm gonna start sharing my screen in a few seconds. So as our colleague Kes has mentioned, I am originally from Puerto Rico. I am currently a professor of finance and quantitative methods at the City University of New York. And one thing that I also run a research group in Bogotá, Colombia. That a couple of years ago, I worked as a Fulbright scholar as a U.S. researcher in Colombia. And one of the things that we started working on was specifically on how is it that household acquired skills on financial literacy impact its wealth and quality of indebtedness. So just to talk a little bit of casually about how this turned out, when you start walking and start engaging with people in Colombia, one thing that you start noticing is that a lot of individuals, one of the things that really triggers their upsetness, how upset they get, it is how much non-financial debt exists in the household, and specifically predatory non-financial debt. How many people out there are trying to take advantage of people that are in need of financing, and they give them these incredibly high interest rate loans, and with interest rates that go by 20% a week. And one thing that they do is that they start rollovering them week after week, and the interest rate on a simple loan becomes a ridiculous amount. And so that's one thing that it really triggered my interest. And we started doing some work with one of my colleagues in Sardinia on how is it that banks were entering the microcredit market. And then we started targeting a lot of on how is it that financial literacy skills affect the very poorest of the poor. But then we started also focusing on what about the middle class? What about not the poorest of the poor? And we started looking at these individuals, because one thing that I absolutely loved about Colombia, the country itself and the people, is the optimism that the households have. Like there is, as you know about Colombia, like they have been in a civil war that has lasted more than 50 years, and suddenly they have had the longest period of safety in their history, and a lot of individuals were born during this period. So suddenly there is this optimism about the future and about accumulating wealth and being part of a financial system. And how is it that all these other characteristics affect that capacity that they have of wealth accumulation and the quality of the debt that they gain? So with that in mind, me and my colleagues went out to write this paper, and we recently got it published at the Review of Development Economics. But it is basically a quantitative methods paper applied to wealth management and wealth accumulation. So the way that we're going to go through as a summary is that we are going to attempt to find existing linkages of financial literacy, specifically numeracy and money management skills, with the indebtedness and wealth accumulation of households in Bogotá, Colombia. Now, one of the things that we find is that financial numeracy is found to have a positive correlation with the decision to use debt. So actually, this is a little bit fascinating that if people that have higher financial numeracy skills, they tend to be associated with having debt, with also having a mortgage, with also having a higher number of lending sources. They tend to have a higher debt to income ratio, and they tend to have a higher net worth. Money management skills, it is specifically your capacity on being able to cover all your expenses with your monthly income. If you have that skill, then you are able to, or you are in that situation, that decreases your likelihood of using every type of debt, and it also it is associated with increases in net worth. Now, as an introduction, for some time now, financial literacy, in however way that you want to measure it, it has been found to be fundamental for sound financial decision making. It can be considered also to be an essential tool to complement a household's financial portfolio. One thing that you tend to hear a lot with financial literacy is that those that do not tend to have a notion of a healthy notion of financial literacy, it doesn't matter the income that they have, they will always be poor. So it is one of those things that if you don't have it, it is pervasive towards your long-term financial outcome, and it is essential as an essential part of your portfolio. Now, while pretty much every country, every policymaker agrees that financial education should be a priority in the development agenda of every emerging country, how do they effectively socialize? How do they effectively impart financial literacy? It is still a debate among not only scientists, but practitioners also. Now, let's go a little bit of the city that we're going to be focusing on. First, specifically, we're going to focus in Bogotá. Bogotá why is it an important city? It's the fourth most populated city in Latin America. It also accounts for 17% of the population of Colombia. It is the country's capital, and it is its most important administrative center since the foundation of the country. It is also, and this is particularly important for this research, it is also the city with the longest history surveying financial literacy skills to its inhabitants. So we are able to track a history of financial literacy across households. And one thing that it is interesting is that Colombia, when you listen to Latin American news, normally the three most important countries that you hear, Colombia is not included. Normally you hear about Mexico, it's the biggest economy, also biggest economy in addition to Brazil, as well as Argentina, that they tend to be the ones that capture all the news. Colombia, except for its combative history for a couple of years, normally you do not tend to hear it. You do not tend to hear much of it in the news itself. But one thing that it is interesting, it is that Colombia has been characterized with important advancements in capital markets liberalization, specifically triggering financial inclusion. So it is a country that it has a lot of challenges in terms of development of its population, and they have done a lot of initiatives in order to try to target access to the financial system for that population that has been excluded of it for many years. So with my colleague from the University of Sardinia a couple of years ago, Luca Deida, we were working on specifically what is it that the Colombian government was doing in order to include those people, that portion of the population that has been historically unbanked, try to include them into the financial system. And specifically, we focus on the promotion of the commercial banks offering microcredit. So in that particular study, we focus on, like, not historically, you see NGOs and nonprofit organizations to be the ones that focus on microcredit. So in Colombia, in the last couple of years, it is the commercial banks who have entered that market because of many reasons. But one of them, it is because they have found it to be actually quite profitable to enter that area. They have been able, they need to change the way that they act. They have to change the way that they approach this type of population, but they have found it to be a very, very profitable portion of the population. And they have found that the default among this population is incredibly low. So it is an interesting part of the way that financial inclusion has been extending. But another way that they have been doing it is that they have eliminated minimum savings limits. Like now, historically, when a person opened a savings account in a bank, there was a minimum amount for opening that account. So that has been eradicated. I know that has been in place for many years in many countries, but that was not the case in Colombia. Bank branching has been extended to the country's most remotest regions. We're talking about now in Amazonian regions, we are starting to have banks. It used to be that interest rates, they were capped at a certain usury rate. Now they eliminated those also. They have also target high cost non-financial lending, which is the topic that we have that we talked a little bit in the beginning. And lastly, they have advanced financial literacy. They have done a few initiatives in order to be able to advance financial literacy. And that's where we get in. And specifically, since 2005, there has been some coalition among the banking sector, the commercial banking sector, the central bank, and some regional educational ministries in order to incorporate financial literacy, specifically numeracy skills, to be included in the instructional curricula of primary and secondary educational institutions. So they are done their best to try to target individuals from a very early age. And since 2009, it is the right of every customer that goes into a financial institution to receive the appropriate education in order to be able to understand the financial instrument that they are inquiring about. However, as you might have an idea, financial education to young students, when it is by a coalition that when it is done by a coalition that it talks about commercial banking and central banking and also regional educational ministries, you can tell that there is very little, that there is the possibility that there is very little coordination. And this is something that we notice. Also over here, when it is the right, I think that when it is the right of every customer to receive the appropriate education of a financial product that they are inquiring, one problem that they might have is that they can always claim that they know what they are getting into and then do not receive that financial education. So there are a lot of caveats with these two rules that are in place. And nevertheless, even though that we have those two situations, we have found that the Colombian population ranks among the lowest in financial literacy attainment, specifically numeracy, measured by the PISA or the INFE. And we're going to try to see, well, if that is the case, if they haven't been effective, so where does our research stand? So let's see, how is it that households tie their debt and wealth with their financial literacy and numeracy skills? And let's try to get an overall view of what it is happening within the household and these characteristics. And let's see if we can put forward some recommendations. So let's see how is it that where we stand. First of all, we measure financial literacy using two measures. One is numeracy skills and the other one is money management skills. And we extracted from surveys that has been implemented in the country for many years now. And these are, and we basically are following pretty much. It's fine if I have to teach how to get into that. I think that, okay, so obligation to offer financial education means specifically that the bank, it is obligated by law to offer that financial education in case that that somebody inquires it. But if somebody does not inquire it, then they do not give it to it. So that is actually a problem that they were having. So another situation that happens is that so basically our measures of financial literacy follows pretty much everything that it is out there of similar studies that are going on. And normally, and I agree that this is a very close and narrow view of what financial numeracy means. And I do agree with that. I think that everybody agrees with it, but it is the one that pretty much every study out there that measures financial literacy, numeracy skills, this is the one that they use. So this is the one that we're going to do in order to be able to compare our results with other countries. And it is that normally the way that financial literacy, numeracy is being measured in these households is that they use the big three questions. And these big three were implemented in 2009 by the National Financial Capability Study that in the US. This is our big survey of financial surveys that it is applied on households, but it is also applied in the INFE, in the International Survey of Adult Financial Literacy Competencies that it is applied by the OECD as well by the PISA consortium. So basically, the reason why we chose those is because that is the one that is being chosen by pretty much almost every other place out there. So our results are easily comparable to other places. So how is it that financial numeracy skills are being measured? So it's being measured by the answer to three questions. One is, if a person is able to answer correct or incorrectly a question about interest rates. Another one, it is a question on inflation. And another one, it is a question on portfolio diversification. So this is the question on interest rate. Basically, that assume that you have $100,000 in your savings account and the interest rate on those savings is 2%. And if you keep the money for 5 years in that account, how much will you have at the end of those 5 years? Now, these are like this is of course a very simple question on interest rates and the effect of interest rates on financial literacy. Sorry, on the effect of interest rates on your savings. But this is pretty much the question, and this is the one that is being applied to pretty much in OECD countries and as well as to in pretty much other countries. The question of interest rate, it is pretty much the same question. Then comes a question on the real rate. You should be assuming compound interest, but if you notice, Helena, if you notice the question itself, it doesn't really matter because it's gonna ask you, like the option says more than 102,000, exactly 102,000, or less than 102,000. So it's always gonna be 102,000. So those questions of compound interest will go beyond the simple big three questions that people do on financial on the knowledge of interest rates. But yeah, it is. I think that in the direction that you're going is one that I shared. That the questions itself are not there is a space to ask much more complicated questions on the effect on numeracy skills. I do agree with that. Now, a similar question is being asked on the real rate of return. Assume that in which what is the impact of inflation on an account that it is growing with an interest rate of 1%. And lastly, so this is a similar question to the one before, but lastly, I think this is the one that a lot of households, they tend to have the most problems, is the one of risk diversification. Because the concept of risk diversification, it goes Yes, 100,000. So best, it's in the notion of, so yes, 100,000, but in this case, 100,000 is 100,000 in Colombian pesos. During that time, it is something like $50. No, notice that it is not euros, or it is not euro. It is in the one that is being applied in Colombia. It is in the one that is being applied in Colombia. It is expressed as Colombian pesos. They also use the same dollar icon that is being used in the US, so it's a little bit confusing in that sense. Yeah. And the other one, it is, yes, I agree. Yes, it is a stock as shares in the stock market. So the questions that they are being asked, so basically the question is, it is about risk exposure. How is it if you buy just one stock, if you want one share of the stock, if that on average exposes you to more risk or less risk than if you buy a collection of other stocks. With it makes pretty much, unless we're talking about Bitcoin, pretty much exchange traded funds. It is a collection. Exchange traded funds will be like a mutual fund. It will be a fund. It is similar to a mutual fund in where you are buying a pool of multiple companies. So let me just go again, because I think that I made the question more complicated than what it is. So this question goes to what is the impact of risk in a portfolio? What is the impact of risk in a portfolio that it is composed, for example, of having just one, of being composed of only one stock, as opposed of a portfolio that it is composed of a lot of different stocks? Yes, I do agree. This is the question that a lot of individuals, they tend to have the most amount of difficulty. And just to put everybody in context, when you have the questions like when you are being exposed to a lot, when somebody just carries okay, so I will go again. Whenever you are holding just one stock, you are exposing yourself to the risk of the market and the risk of that stock. Whenever you are buying a stock in a lot of companies, you are only exposing yourself to the risk of the market itself. So yeah. So basically, now comes, so we have already discussed our definition of numeracy skills. And our definition of numeracy skills will go to the answer of the households to those three questions. So it can go from 0 to 3. Money management skills are measured according to the head of a household perception of the household budgeting skills. For example, what is the ability of the head of household to be able to cover monthly expenses with the current income? So basically, we conduct our analysis from the period composed from 2011 to 2015. So we take 5 years of data. We take the biggest surveys that are being taken in the country, and these are very, very well constructed surveys. We are able to get information on financial literacy, so the numeracy and money management skills, as well as the depth of the household, the income of each individual in the household, the assets that they own, if they are employed, if they are not employed, their civil status, single, married, or widows, the age and the education level. Basically what we do is that we take a randomly, so they take a randomly chosen household to be included in the survey. They make sure that the head of the household is at least 18 years of age and that they own a financial instrument. If they do, then they approve the household and then they survey everybody inside of the household. This is actually very similar to surveys that are being conducted in, for example, in Germany and many other countries. And all the financial data is in Colombian pesos. So this addresses the question that was being done before. As a rule of thumb, during that time period, $1, close to €1, but $1 and close to €1, it is similar to 2,000 Colombian pesos. Okay. This data covers a yearly cross section that it is composed of around 83,000 individuals and almost 32,000 households. This is pretty much a summary statistics of the data. I will go over all this in a second, so please do not worry too much if this is too overwhelming at this point. So these are the answers of numeracy. Please notice something, that even though that two households, that on the most households out of each question, out of answering 0 correct, 1 correct, 2 correct, or 3 correct, most households are within the answering 0 correct or 1 correct. Although, as of individual groups, most households answer correctly two questions correctly. But most households, the median household is found within 0 and 1. Now, 14% of the households answer correctly all 3 questions. This is a little bit below of the scale when you compare it, for example, to European countries. This percentage is close to that of Mexico, which is 15%, and it is higher than Chile and Russia, that are countries that have done similar studies like this. Money management skills. Notice that only a fifth of the population perceive that their income is sufficient to cover monthly expenses. And the highest education attainment for 44% of the household is high school. Notice that most of my households have either no high school or technical studies, or they have a high school. Most of them, they tend to have a high school, but most of the population, as 19% of the population, their highest level of education is some college education. Now, in terms of, these are our 5 main indebtedness and wealth accumulation statistics. First of all, you have that 67% of the households have a member inside of it that uses some type of debt, even though that most head of households do not use debt financing themselves. Most households, they have a member that uses some type of debt. Now, this type of notice that most of our households do not have, I'm gonna go to number 3 now, what we call predatory debt, high interest, non-financial debt. Less than 5% accept that they have this type of debt, which is the one that we talked at the very beginning. The last one is debt to income ratio. Basically, our household, they tend to have, in terms of debt expenses in a month divided by their income in a month, it goes around 27%. And the net worth, now over here, I'm expressing it in dollars. This is the only occasion that I'm gonna be expressing it in dollars. It is close to $500 a month. So sorry, $500. So that is the total amount of the net worth, the total amount of wealth that they have accumulated. It is around $500. So we're talking about households that are not, that on average, that on the median value of that household is not that incredibly, it is vulnerable, to say the least. Now, I wanna make a moment to talk about that comment of usage of debt finance. Number one, you can use debt finance because you do not use debt finance if you do not need it, but also you do not use debt finance if you do not have access to it. So we always have to be careful whenever we use this type of, whenever we think about if a person gets in debt, because if you get in debt, it is because you are able to do it. But if you do not get in debt, it is because either you didn't need it or you didn't have access to it. Unfortunately, our data at this point does not let me know if a person have, if somebody wants to get indebted and just is not able to get that data. But it is something to always have in mind. We also separate our data if the head of household, it is led by a female. If a woman is the person that is the head of the household. And this is particularly important for Latin American countries, as the amount of head of households that are being headed by females has been increasingly significantly in the last couple of years. In our data, 1/3 of the heads of households, of the heads of those households are women, and on average, they tend to be older than the full sample, which for wealth and indebtedness, that is something important to have in mind. Those female-led households, they tend to have lower income, they tend to be smaller in size, and a smaller proportion of these are unemployed and are married. So you tend to have a significant amount of them that they tend to be employed and that they are unmarried. Now, in Colombia, Bogotá also has a very interesting division of the city. I don't know if this is something quite unique for a Latin American city, that the city itself, every household is categorized according to a stratum. So they go from 1 to 6, and strata 1 and 2, they are heavily subsidized by the local government. 3 and 4 are what you could call the middle strata, and this is basically the middle class in a way. And 5 and 6 are the highest strata. Now, it is believed, so you would imagine that the highest strata outcomes are the ones that have the highest net worth. They tend to be the ones that are significantly better well off in terms of financial variables. And we have over here, notice also that they tend to be a little bit more, they tend to have more access to debt, or at least that they use debt with more often than other types of households. Now, one thing that we do is that we divide each household according to their strata. In addition to all the data that we talked before, we divide it according to their strata and according if the household is led or not by a woman. Because in terms of, these are very, very important characteristics for determining that they tend to influence the debt and wealth accumulation according to all the literature that we have read. One thing interesting is that household led by females within the lowest and middle strata, they tend to have lower usage of debt than the same households if they are led by men in those strata. Notice they also have a lower debt to income ratio, but that is not the case in the highest strata. So a lot of the things that we see differences between gender of the head of the household, it tends to affect the lower stratas, but it does not tend to affect as much the highest strata. Now, so now we go to the econometric portion of the analysis. Basically, well, for those of you that are not that acquainted with econometrics itself, econometrics method itself, basically what we want to do is that we want to try to explain a couple of variables. Specifically, what variables are those? The usage of debt, the quantity of lenders, the usage of mortgage finance, if they use high interest non-financial debt, the relationship between debt to income, the relationship between debt mortgage to income, and the net worth, and we want to relate that to the numeracy skills of the household, the money management skills of the household. If the head of the household is unemployed or not, if it's married or not, if it's widowed, the age, the education, the size of the household, the income of the household, if it's led by a female or not, if it's part of them and the stratum that it belongs to, if it belongs to the lower, the middle, and the highest strata. And because this is a talk about numeracy, I'm going to go directly to numeracy. Basically, one thing that we find is that numeracy has an important impact over a lot of our variables, specifically those that are related to debt accumulation and also to net worth. So let's go, for the interest of time, let me go specifically to numeracy. Numeracy skills, increases in numeracy skills are associated with a household likelihood of using debt, of having a mortgage, and having multiple lenders. So numeracy skills, increases in numeracy skills are tied to capacity and usage of debt. There is no correlation between numeracy skills and high interest non-financial debt. I would have loved to find some correlation between those, but I wasn't able to. A non-result is also an important result. Now, this is an interesting result. Even though that having money management skills, it lowers the debt to income ratio of an individual. If an individual is able to have money management skills, then they have no use to debt, they have no need for that debt. But some households, they do get indebted. Now, if the households have numeracy skills, it has an incredibly big impact on the debt to income ratio. Remember, what is debt to income? How much a household spends in debt service divided by the income of the household. But it goes in the opposite direction. An increase in numeracy skill is tied with an average increase of 14% in the debt to income ratio. Let that sink in. A lot of other people before me have found that if you have numeracy skills, it tends to lower your debt to income ratio. And why is that? And it makes sense, because debt to income ratio, it measures a lot of things, but one of those things, it is how much is it that you are spending in debt with respect to your income. If you have numeracy skills, you will try to get away from high debt costs. Now, a lot of I have found that other people have found similar results to this, and basically they argue that people with high numeracy skills, they tend to overestimate their financial knowledge, and because of that, they tend to assume excess levels of debt. So there is a little bit of cockiness in that sense. There is that overestimation, and and just to try to find a place in the middle, we have some people that they say like, well, a lot of these individuals, they might be behaving optimally because they have an impression of what is it that is going to happen in the future, and they are getting indebted today with the expectations that there might be a high increase on future income. So just for the interest of time, I will keep going on, but we have found that net worth, it is incredibly important numeracy skills for accumulating net worth, for accumulating wealth. And that said, that is not the case in general for women head of households. There has for the very, very poor, for the lower strata households, if that household is led by a woman, that tends to have a negative impact on the wealth of the household. Now, in the middle strata, for what we could call the middle class, that effect disappears. There is no differences between men or women-led households. But for higher strata, women-led households tend to have, on average, a higher net worth. So it is very, very interesting how gender affects your net worth across the strata, across what we could call the classes around the households in Bogotá, Colombia. So So what are the main conclusions? And I'm going to take 2 minutes on this to allow time for questions. Is that we found money management skills have an incredible impact. So and basic, but the thing is that money management skills, they tend to have a limited impact. They have an important impact across the board, but it is quite limited. So it isn't like we do not go into let's make people experts in money management skills. I think that we believe that basic money management skills like budgeting, financial awareness, and bill management have found to be the basic cost of money management skills that guarantee that people do not get over indebted. And we have found that this result, it is consistent with other people before us. The fact that we have found that numeracy increases the debt to income, we think that there is, with education initiatives out there focusing on numeracy, like this, the one that we're talking today, I think that we believe that those when interested in financial literacy and numeracy skills, they have to be proper. They have to focus on properly assessing the cost of debt financing and the effective methods of minimizing it. I think that numeracy skills within a financial literacy area that are interested in improving household financial situations, they need to help people get educated on what are the costs of debt, what are the real costs of debt, and how is it that you could diminish it. We found that I'll read that in a moment. We found that mortgage has a big impact. So, but we sort of like put it on the side. And specifically, given the increasing number of households led by women, we think that these educational initiatives, they tend to be directed. They have to effectively target women, and not only in one place, but in multiple places. And we have found, what other people have found, it is that it is not a one-size-fits-all education. It has to properly assess each individual, and it has to be tailored to what are the current financial needs of each individual and what are the aspirations of those people. Just something canned that good for everybody is not enough on these situations. And it has to emphasize, given the fact that a lot of our households, they led by women, they tend to have less debt. It could also be a question of access to debt. Are they able to get access to financial debt? So that is actually an important question to be addressed. Unfortunately, we cannot address it here, but other works should be able to address it in the future. And the same situation for middle strata households, given the big impact that female-led households are able to eliminate any negative aspect that we saw before. They are able to eliminate it inside of the middle strata households. So given that normally middle strata are the engine on this country, on the economic engine of these countries, if a focus on them would be an interesting extension for this type of work. Thank you very much. Thank you very much.